Hi, I'm Greg Hunter. Welcome to USAWatchdog.com. I get a lot of requests from people from the silver investor side of the equation. A lot of times I talk to people like Jim Sinclair. I talk to people about gold. It is the monetary metal held in central banks. Silver, of course, is not, but lots of interest in silver. So, who could I have on to really take us to school on silver? And there is no better person than David Morgan. David Morgan, thank you for joining us today on USAWatchdog.com.
My pleasure, Greg. Thank you.
Now, I know you have themorganreport.com and also silver-investor.com. And you know about the silver market. You made a pretty big call not long ago when you were on USA Watchdog. You said it was $18 and change, and you said, I think that's the bottom. And, we're kind of, coming down to that area. But what do you think about the silver market right now? What would you tell the person who has bought silver and is holding the metal?
Well, I'm going to assume you made like two questions. One is, implies the bottom in. I think that definitely the bottom is in. What's the best time to buy silver? Obviously under, $20 an ounce if you can get at that level. It's been down there a few times and it may continue for a while. I think 2014 is going to be better for both the metals. Someone that's held the metal, ask yourself, really people have to be true to themselves. So you got to ask yourself, why did I buy this metal? And if the answer is fundamental reasons on the global economy or certain economic conditions or what's going on, with the various reasons that could be included in why you would make a metals purchase, if those same factors are holding true today, then I would suggest that you consider holding on. The other part, you can dice this thing up 1,000 ways. I'll just dice it once. If you bought too much at the time, at a higher price and you need the cash, then obviously, you have to make a tough decision and maybe sell some. I've been in that position myself from my earlier days. I was such a fan of honest money and I use too much leverage, and I think anyone that uses leverage can get themselves to that position. And I ended up one time where I had to sell some physical metal that I worked very hard to pay off because I needed the cash. So, if you want to take it from a guy that's been around the block a few times, certainly I've never claimed to be perfect. I've made that mistake. So if you bought it and the reasons are intact, hold it. If you bought too much and the reasons are intact, then certainly hold on to some. Don't get mad at yourself for making a timing decision that's incorrect, or mad at yourself because even though the fundamentals aren't working in your favor at this point in time, believe me, as soon as you sell, it'll be a matter of weeks, and they will.
Well, I was on a radio interview. I don't talk as much as you. You speak all around the world, basically, about investing in silver. But somebody asked me, I was pretty, the facts are the facts. It didn't look very good. And they said, was there any good news? I said, we're going to have a nice Christmas. But I think 2014, wheels are going to wobble. I think you're going to smell, a metal on metal. And I think one of the, tires on the truck, you could see it in front of the car. Tell me about your prognosis for the next year or so. Are there a lot of black swans that could derail the financial markets as we know it?
Absolutely. As my friend Ned Leland says, there's so many black swans flying around that, one could smack into another one. I agree with that thesis, but having said that, I really look for 2014 to be a rebuilding year. January 2013, silver's at 32. Gold was at 1,700. I think we're going to get kind of what's called a symmetrical chart pattern, meaning we're going to come back up to those levels, and it may take a full year to do it. There's a lot of banks out there that are much more bearish than that, thinking that, gold's going to average like 1,200, and I forget what Bank of America said, some goofy number, $1,254 for the year or something. I'm much more bullish than that, but I'm not exceedingly bullish. But again, going back to what you started this with, if a black swan is to take place, all bets are off. I mean, this is where you could get limit up days in gold and silver and never look back. I don't anticipate that, but it could take place.
Well, if you take a look at what's gone on in the past, I mean, there's all kinds of talk, for example, from Gerald Celente and Pastor Lindsey Williams, and I know he doesn't disclose his sources, but his numbers. I mean, I listen to him closely and think, wow, what he's talking, the numbers are the numbers. The warnings are the warnings. Both he and Gerald Celente are predicting some sort of currency reset in early 2014. But whether it's early 2014 or mid 2014 or 2015, aren't we going to get a currency reset, a devaluation of the dollar? Isn't it being clobbered now on the global stage?
Well, the overall trend for the dollar has been down, and it continues. I've listened to Pastor Williams' recent interview on GoldSeek. I don't rule out a currency reset. My view is slightly different at this point in time. I don't think it will happen in the first quarter. I think what you're going to see is a peak in the stock market and then a fall off. And the most negatively correlated asset to stocks is gold, not gold stocks, but gold itself. So as your previous interview with Greg Manarino suggested, that money that's coming out of the stock market, by the way, the insiders already out. They've done what's called a distribution pattern. They've let the patsies hold the bag, which is the general public for the most part. And so as the general market comes down, you see gold go up. And I think it's going to be more or less a hands-off wait and see by the powers that be, namely the Federal Reserve, to see if they have to manage or not manage. Because I think they really want to see how much power they have by just kind of seeing, problem, a solution. They're not ready for the reset solution at this point in time, in my view. I'm not arguing with Celente or Pastor Williams at all. I'm just saying that they really want to always get, and this is my take, my conjecture, they want to get a handle constantly here and there on how much power they really have. Because at some point in time, history has borne this out again and again and again, that they don't have all power and that the markets themselves will take over. And so I think from time to time they do these little things to find out, how much free market is moving and how much they've got to intervene. And again, at some point they will be intervening and the market will ignore it. But I don't think we're there yet. In the meantime, they could cause a big problem. And they say, oh, look at problem, our solution, currency reset. And certainly that's very much, could be in the cards.
Well, yeah, Gregory Manarino was talking about how, if the Fed's not going to taper at this moment, we're going to have this nice Christmas. He says, but if they do it, they're going to do it. They have a reason to do it. They want the things to cascade lower, that they're going to know what they're doing. People think they're stupid. They are not. But you don't think that the Fed will taper in the first quarter? Because that's what the chatter is. The chatter is they're going to taper. And if they do, I can't see how the market continues to do well with this $1 trillion or beginning of $1 trillion taken away. Or is somebody else going to ride in and start, taking up the slack when they cut it $10 billion?
Well, there's lots of scenarios. I've thought about it, and there's a couple. One is that they'll probably make some cursory taper and, again, watch the markets. And, would it force it down? All indications are that it would. But they could actually force the liquidity of some of these banks to, buy U.S. debt as well. So they could say, that the reserve requirement on the banks are such and such, and actually force the banking consortium to buy into the bond market. So there's lots of scenarios. So, for example, you could say, okay, we're going to cut the tapering back to 70 billion instead of 85 billion. But the reserve requirements for the major member banks are such and such, and they have to take those assets and buy treasuries with them. So, a lot of things that go on. I don't want to be, too cute or, so many what ifs, but I've thought about it, deeply. And this is, one of the things I've seen that could easily take place. And I, again, think that they are really having more sleepless nights than they pretend. They get all, they look great on TV, or maybe they don't look so great on TV. The point is that most people give them credit for having more power than they actually have. Certainly have a great deal of it. But again, the market itself, when there's a panic sell-off, and I think this is what will take place at some point, when there's a panic sell-off in the bond market and they have to halt bond trading, that's going to aggravate the situation. It's going to make more people want to get out and get back. So they turn the market back on rather than quelling the market. They're going to see more sell orders than ever before. There's nothing but sell orders and no buyers. You've got a market crash. And I think that could take place. 2014? No, probably not. I wouldn't rule it out 2014. But this thing meaning the financial system on a global economic scale, is in a place that has never, ever been established before. So it's very difficult for anyone, myself included, to forecast how it will unravel. But to think it will always unravel smoothly, slowly, we can continue to kick the can down the road, I think is not borne out by history. There are anomalies that take place, and they can take place rapidly. And that's why I think I'm such an advocate of, hard money, honest money, gold, and physical silver, because you want to be early. you don't want to be late. If the bond market does get halted for whatever reason, cyber attack as an example, you don't really want to be driving down to your local coin dealer with your hard cash to find out that he's frozen up his markets because he doesn't know his market's frozen as well. He can't get a quote. He doesn't know what to sell it to you for. You capiche?
Yes. At some point, it may be the only asset that is valuable. And then, you'll be setting the prices between individuals, kind of like the derivatives, a U to U market, right? I was reading in the newspaper now, you're talking about, that the things are shaky. Greg Manarino aptly brought up, at the beginning of this week saying, there are just many bubbles, multiple bubbles. And lo and behold, in the AP story in my local newspaper, they're talking about the people worrying about multiple bubbles and that it all centers around tons of debt. And that the debt is huge and ever expanding. It's like the budget deal we just had. It's a much ado about nothing, or more of the same, or whatever you'd like to say. A surrender by the hardcore Republicans, or not the hardcore Republicans. John Boehner's criticizing the Tea Party, but what they didn't bring up is that this budget's going to come up with another couple of $1 trillion. We're going to be bouncing around $19 trillion by the end of 2014, mid-2015. I mean, the debt is growing. So shouldn't precious metals long-term be kind of marking the growth in all this massive debt?
Well, as Mike Maloney says, and I wrote an article on it called Engineering the Price of Gold, gold and silver, especially gold, does an accounting, is how Mike refers to it. And basically what it does is it does a full cover of the debt that's out there. So every dollar is covered by gold, meaning the paper price is equivalent to the amount of paper out there. Probably not explain it very well. You can look it up on my website, Engineering the Price of Gold. But basically what it says is if you went back to gold standard and covered this M1 money supply, what would the price of gold be? And you could argue the math. It's an arithmetic problem. It'd be like $3,000 to $4,000 or $5,000. So to predict those numbers really isn't that difficult right now. $1,200 gold, we're looking pretty cheap. Going back to the debt problem, I mean, the best analogy I've ever read about it comes from John Exter. I picked the silver pyramid up in Germany on my last speaking engagement in Munich. But the system is an upside down pyramid, Greg. And an upside down pyramid is the least stable structure, whereas a pyramid right side up is one of the most stable structures. So as you can see, as we go up and up and up in time, meaning an analogy for the debt has to continue to expand. Well, every brick that you put on the base, and of course it's upside down, expands it exponentially. And that's the mess that we're in. I mean, under the Obama administration, we've seen a huge increase in the debt from, 8 trillion to 16 or whatever it is, giving you the right idea, maybe not the precise numbers. And this will continue. And if it doesn't continue, as Greg Manarino pointed out in your show, it'll implode. So they have to continue to expand the debt. Not that they won't play games of tapering this and that, but it's obvious to the Chinese that the U.S. is not going to make good on their debt. So they're doing the one thing that's been shown in history again and again and again, and that's go to gold. Run to gold. Get gold. Get it physically and get it at a rate that isn't going to upset the market. So you buy about, 3/4 to a year's worth of gold supply that comes out of the ground. Do that year after year after year. Keep all the gold that you mine internally in-house. Suggest to your citizenry that they own gold as well, and just keep accumulating and accumulate until that, that puff, poof, bang moment happens, or moments. And again, I'm not saying that there's going to be a one-day event that takes the bond market down. I'm not ruling that out. I'm just saying that this is what's ahead of us. How it unfolds, no one knows exactly.
So if you take a look at the gold market, the silver market, I mean, they can play this paper game as long as they have gold at LBMA, as long as they have gold at the COMEX, and they don't start saying, oops, we're done, putting gold out the door. I mean, there is a lot less gold and silver in the vaults of these two big trading entities that set price than there was 5 years ago. I mean, aren't we seeing this come to a close? I mean, aren't we seeing this kind of change and it's starting to look like we've seen the end game here? At some point, don't they just run out of gold and silver to try to manipulate with a paper contract?
Well, it is pretty much a game of chicken. I mean, to be clear, the contracts are very specific with the LBMA and the CME. and they settle in cash. And that's right when you sign a contract, whether you're J.P. Morgan Chase or you're, Greg Hunter, doesn't matter, individual or corp or anything in between. The rules are the rules, and they're fairly consistent. I mean, there are different margin requirements if you're a bank than there are if you're an individual. But going back to point, yes, you're correct. The amount of dealer inventory, which is the registered category, which is you should pay the most attention to, has gone down significantly in gold. Right now, last time I checked, it was around 600 million ounces, which is a spit in the ocean relative to the size of the gold market. But if they were to default, they, of course, would not default because they can force you to take cash. It's per the contract, so they're just obeying what you already signed to agree to, that we're not going to give you the gold that you want, we'll just give you the paper equivalent. Same thing on the silver side. The registered category of silver is actually up from the lowest I've ever seen, which is around the 32 million ounce level. It's higher than that now. The overall inventory is actually up quite a bit. A lot of eligible silver has come in, but the registered category, the dealer inventory, is very low relative to what it's been, say, 5 years ago. So yes, but that's not the only place that they can control it. There's other stuff that's over the counter they could probably get their hands on, and there's all the shuffling between central banks and that type of thing. So there's a lot of, games that are being played, but you're right on, Greg. I mean, I don't want to dilute what you're saying. You're spot on. I mean, whenever I think about this, I just go back to the fact that Germany can't get its gold for 7 years. I mean, that's a default. Any way you want to slice it, you can go ahead and make a bunch of puff statements about it. But if there's all this unencumbered gold around, then they would have their gold back presto changeo, and they're not. So that's because there's so many rehypothecations on it. There's so many claims on the same ounce over and over and over again. Same thing in the silver world. So when the music stops and everyone has to take a seat, there's going to be a lot of people standing that think they own physical that don't.
Okay, so if you can look into your crystal ball for gold and silver, where do you think the price is going to end up next year, at the end of next year, 2014? You were talking about a round trip in gold and silver. Do you think it'll be back to where it was, at the beginning of 13 or something?
I do. I think we're going to see $30 to $34 silver and $1,700 gold. Again, the black swan's out there, so it could be, proven wrong fairly easily if something were to occur like that. But barring that event, I think it's going to be a rebuilding year. I'm looking at it to be much better than some of these, bank forecasters who are looking at, 1,250 gold for the entire average price for the whole year. I'm not saying 30 to 34 is the average price. I'm saying we're going to establish that level in silver and 1,700 in gold. That's my forecast.
David Morgan, themorganreport.com, also silver-investor.com. David Morgan, thank you for joining us today on USAWatchdog.com.
Thank you, Ray.